Well, it's officially earnings season, and I don't normally cover earnings on this channel too much, but if you guys would like to see more kind of frequent little update videos on different stocks and different earnings, then maybe I can do some more of those. But anyway, Netflix reported earnings today. They were very strong and the stock soared, so we should talk about it. What's up everybody, my name is Ale and welcome to my world of stocks. So Netflix reported very strong Q3 earnings today and it sent the stock soaring. At one point the stock was up close to 20% today, but it kind of came back down a little bit and is now up around 16% at the time of this recording, with most of that coming in after hours trading. And they're currently trading for pretty close to $400 a share, and they're up over 100% year to date, which is pretty insane. Now you might remember the last earnings for Netflix for Q2, and the stock basically got hammered because they fell short of both analysts and their own expectations, and so the stock dropped by, I think it was close to 15% in after hours trading before recovering a little bit the next day. Now when looking at subscribers for that quarter, they added 5.2 million new users, which was short of both their own 6.2 million estimate and Wall Street's 6 million estimate. So basically a miss of around 1 million subscribers, which is a pretty big deal considering the premium price that Netflix has been trading for. So to make sure that this wouldn't happen again, Netflix gave much lower guidance of around 5 million new users for the third quarter, which historically they would see a lot higher than that, but they kept guidance pretty low because, you know, they really wanted to make sure that they could hit those numbers. So let's talk about those numbers. Let's talk about Netflix's Q3 earnings that they just reported today. Now, they reported EPS of 89 cents, beating estimates of 68 cents by a pretty large margin, and revenue came in at 4 billion, which was expected, but it's still well above the 3 billion that they reported last year. Now, when looking at the all-important subscriber count, which can obviously send the stock soaring or it can really tank it, they reported almost 7 million new subscribers, which, by the way, again, we mentioned that they were guiding for only around 5 million. So that's almost 2 million more than what they were guiding for. And even Wall Street was expecting around 5.1 million. So they easily beat those numbers as well. So just very strong performance when looking at their subscribers. Now broken down, domestically, they added 1.09 million new users versus 673,000 expected. And internationally, they also beat that number. They reported 5.87 million versus 4.46 million expected. So very impressive numbers on both fronts. Now looking ahead to the fourth quarter, they're guiding for another 9.4 million new users, which is pretty high. But you have to remember that they do usually see very strong numbers in the fourth quarter. Kind of seasonally, it's their strongest quarter. So they're expecting 9.4 million new users, whereas Wall Street was only expecting them to guide for around 7.7 million new users. So I find that number kind of interesting because, you know, Wall Street was only expecting them to guide for 7.7 million. They're guiding for over 9 million. So that's kind of leaving me wondering, like, you know, what happens if they don't meet those numbers? You know, they're kind of guiding pretty high now, whereas in the second quarter they took the complete opposite strategy. They said, let's guide low and let's make sure that we hit that target. Now they're guiding pretty high, but then again, the fourth quarter is usually their strongest quarter, so maybe they actually can hit those numbers. But regardless of those numbers in the fourth quarter, I think Netflix will probably see strong performance in the short term, because we're still not seeing competition coming from Disney or Apple just yet. That's going to be coming sometime next year. And so right now they're only really competing with Amazon and maybe Hulu. And I think on average people usually like the platform of Netflix versus something like Amazon and Hulu. I think more people are more attracted to Netflix. But looking long term, this is not a stock that I want to be investing in. Long term, not really a stock I want to invest in. Now, I've said it many times, I'm not saying that Netflix can't compete with something like Disney or even like what Apple's doing and things like that. I think Netflix can absolutely compete with them, and I also think that there's plenty of room in that market for multiple streaming services. I could easily see people having both Disney and even Apple and Netflix and Amazon. I could easily see situations where that happens. I'll probably be one of those people. I'll probably have Disney, Netflix, and I'll probably have Amazon service as well because I have Amazon Prime. But just looking at this from a stock market investor kind of perspective, just looking at the prices that these stocks trade for, Netflix is trading so much higher than these other companies. So right now Netflix trades with a PE ratio of 160, whereas something like Disney trades way, much massively lower at around 15. That's a huge difference, 160 versus 15. And then shoot, even Apple and Amazon trade much lower as well. Apple trades at around 20. Can you believe that? Like, Apple is such a huge company trading at around 20. And then Amazon still trades pretty high, but also trades at 144, so still lower than what Netflix trades at. And you get much more diversity with those companies in terms of their business and the different markets that they operate in. You're getting much more value, I think, for the price you're paying with those other companies. And, just looking at the PE ratio alone, that's just one small piece of the puzzle. I understand that, but it's still, just at first glance, these other companies are much cheaper. These other stocks are much cheaper. Not to mention that with Apple and Disney, you actually get pretty good dividend growth stocks as well. They might not be the best, but they're pretty good. And you don't get anything like that with Netflix. So I'd just much rather invest in companies like that. But out of all those that I just mentioned, Amazon, Disney, those are companies that I'm really bullish on. And but I might be a little biased because Disney is actually my #1 largest stock. So maybe you shouldn't listen to anything I have to say. But again, I think long term Netflix, they'll still be around, but I think that they trade for too high of a price. So maybe you will still get some gains, but I don't think that you'll get as big of gains as you could with something like Disney or even Amazon. But maybe I'm completely wrong and I'm just being overly biased and I don't know what I'm talking about. Let me know in the comment section. Do you agree with me? Do you disagree with me? How do you feel about this earnings? It looks pretty strong. Are we off to a pretty good earnings season? Could we see other companies perform very well also? And would you like to see more frequent little kind of update videos like this in the future? Let me know. Let me know in the comment section. If you enjoyed this, hit the like button, and I will catch you guys in the next video. Have a wonderful, beautiful day, and take care. Bye-bye.